Many frustrated by the seemingly never-ending price hikes driven up by inflation. Tonight, our fact-check team doing the research to figure out when Americans could see some relief.
Inflation hitting 8.6% last month, the highest these rates have gotten in more than 40 years now. I'm here with our fact-check team tonight, Julian and Connor. Connor, we start with you. Of course, the big question here, everyone hoping inflation has peaked. Has it?
We've seen a little bit of fluctuation here recently. It was lower in April, but then shot back up in May. So the reality is we can't tell if it's peaked. And it really depends on who you ask. Based off of high gas and housing prices, economists at Kiplinger project inflation will hit 9% by the end of summer, then decline to 3 to 4% next year. But investment strategist Mark Lucchini thinks it already has peaked because used cars prices are starting to go down and Walmart and Target have gotten a lot of their supplies back. So some lower prices could come next year or even sooner. But again, that's just based off of a couple educated guesses.
So questions still remain overall if inflation will remain high or low in the coming months. But what about the economy overall, Julian? What are economists saying there? What are they predicting? And how do they figure this out?
Well, Ryan, I'm going to do my best not to put you to sleep because some of the methodology that economists use is pretty complicated. But here's what you need to know in a nutshell. In government finance, there's something called a bond yield that essentially tells you how much you can make by investing in government bonds. Now, normally, long-term yield rates are higher than short-term ones because investors need more bang for their buck if they're putting their money away for a long period of time. But sometimes short-term yield rates actually spike way higher or just a little bit higher than long-term ones. That's exactly what we've experienced this week. Take a look at this chart from Bloomberg. It shows you exactly what I'm talking about. What you're looking at here is what economists call an inverted yield curve. It tells you many investors don't have confidence they'll make as much money on long-term investments as they would previously. Why is that? Because they see a recession coming. So a lot of economists look at that inverted yield curve and rightfully sound the alarm because they think there may be a recession coming.
Julian and Connor tonight tracking this economic roller coaster of sorts here right now. Thank you so much. When we come back, the fact check team breaks down the president's plans to tame this rampant inflation.